Welcome back to Investing Talk podcast.
Great to be back.
We're really excited to dig into another interesting set of services you've brought for us today. Our mission, as always, is to navigate through the information, pull out the key nuggets, and hopefully give you that aha moment.
Absolutely.
Today, our focus is on an upcoming earnings report to watch. Senseonics Holdings, they're reporting on August 6, 2025. This type of pre-earnings look is super valuable, right? It gives a snapshot of what to expect, maybe what to look for.
Yeah, and how the market might be thinking about it.
Exactly. Before we jump in, a quick reminder, if you enjoy these analyses, please think about subscribing, liking this episode, maybe leaving a comment.
And we always appreciate it if you consider buying us a coffee at the links below. Plus, if there's a specific company you want us to look into.
Definitely let us know in the comments. Okay, Senseonics.
What really stands out, I think, with this kind of analysis is how you can take a document like this and really get beyond just the numbers. You start to see the story.
The narrative behind it all.
Right. Recognizing those critical pieces, especially, when a company is at a certain point, like Senseonics is with commercialization. It's more than just a balance sheet. It's a chapter in their story.
Okay, so let's dig in. First thing everyone wants to know for earnings, when is the report actually coming out? When's the date?
So the analysis says clearly, August 6th, 2025, after the market closes.
After market close, okay.
And that timing, it matters. It usually means the market gets overnight to digest things.
Right, before the next trading day starts.
Exactly. Gives people time to process before they act.
So what are the analysts actually forecasting for Senseonics? What's the street expecting for the bottom line?
The consensus expectation for EPS, earnings per share, that key profitability number, is for a loss of negative $0.02.
Okay, a small loss expected.
Yes, but what's maybe more interesting is what's not clearly there in the analysis. Like, there's no explicit revenue consensus figure mentioned.
Huh.
No whisper number either, that unofficial street guess.
Yeah.
And importantly, no specific forward guidance from the company itself seems to be readily available in the public sources used here.
That is interesting. So help me understand, when some of those key things, like a revenue consensus or official company guidance, aren't easily found, what does that signal, or what could it signal?
Well, it raises a question, doesn't it? It could suggest, maybe, that there isn't really broad analyst coverage. Or perhaps analysts are focusing more on, qualitative stuff at this stage.
Like the commercialization progress itself.
Exactly. For a company like Senseonics, maybe the quarter-to-quarter numbers aren't seen as the main story right now. But it also means, crucially, that if they do give forward guidance in the report,
it'll hit harder.
It'd be much more impactful, yeah.
Yeah.
Because the market isn't really pricing in specific expectations from management right now. Any new info there could cause a bigger reaction.
Okay, that makes sense. Now, past performance isn't, a perfect predictor.
Never is.
But it often gives us a sense of a company's rhythm. What does the analysis show about Senseonics' track record with earnings? Have they been surprising people, or are they pretty steady?
Well, looking back, the analysis indicates that over the last 4 quarters, Senseonics has generally been pretty much in line with or very close to the consensus numbers. Like the last quarter, May 8th, 2025. The EPS was exactly 0.002 cents. Matched the consensus perfectly.
So a neutral surprise, basically.
Precisely. No real deviation. The trend seems to be small variances, nothing wild.
And how has the market tended to react to these past reports? Big jumps, big drops, or more muted?
The data suggests pretty modest, crisp reactions after the reports. We haven't seen huge, persistent gaps up or down in recent quarters.
So a relatively stable reaction, historically at least?
Yeah, predictable might be the word. It hasn't been a stock that typically swings massively just on the earnings number itself, which, can be good or bad depending on what you're looking for.
Less risk, maybe less immediate reward potential.
Something like that.
Okay. Beyond just hitting or missing the exact number, are there any sort of broader trends in their EPS that jump out? Is there a direction things are moving?
Yes, and this is actually where it gets really interesting, I think. The EPS itself, it's shown consistent year-over-year improvement.
Oh, okay.
So, for example, last year, the EPS for the comparable quarter was NS at year over 3 cents. The most recent was NS year over 2 cents.
So the loss is shrinking.
Exactly. For a company like Senseonics, which is still, building its market, that's a really critical sign. It points towards better operational efficiency, maybe a lower cash burn rate.
Getting closer to profitability, even if they're not there yet.
Right. It suggests they're tightening things up, improving those unit economics year after year. And that can be much more telling about the future than just the current sales volume sometimes. It shows progress towards breaking even.
That's a great point. So that covers the history and the trend. But what about the quarter that just ended? Aside from the numbers, were there any big external events, major announcements, product news, economic shifts that might color this upcoming report?
Well, the analysis is pretty explicit here. It states that no major headline product launches or really transformative corporate news were noted during the quarter, at least in the public sources they checked.
Okay, quiet on that front.
Yeah. And similarly, no big sector-specific issues or macroeconomic factors, headwinds or tailwinds, specifically impacting Senseonics are mentioned.
No major analyst changes either. Upgrades, downgrades.
Nope, nothing significant cited there either. No big price target shifts right before earnings. So, yeah, it seems like a relatively quiet period externally.
Okay, a quiet news quarter. What about the technical side then? What does the report say about the stock's behavior leading into earnings, like price action or volatility expectations?
On the technicals, the analysis didn't really find specific details on, say, pre-earnings price patterns or key support and resistance levels. It does mention that the options market usually prices in the expected post-earnings move using something called the implied straddle.
Right, the market's bet on the size of the moves.
Exactly. It's a gauge of expected volatility. But interestingly, the exact percentage move implied for this specific report wasn't found in the sources.
Huh. So even the options market isn't signaling huge expectations.
Kind of reinforces that idea of somewhat muted expectations, yeah.
Yeah.
No strong technical signals, no clear implied volatility figure jumping out. It doesn't seem like the broader market is bracing for a massive swing based on this report.
That's really insightful. So if the external catalysts have been quiet, like you said, and the market expectations seem a bit muted, what internal factors, what results within the report itself could actually cause a significant move? What should we be watching for to tell if it's a quote-unquote good or bad report?
Yeah, that's the key question, isn't it? What does a bullish or bearish result actually look like here?
Right.
So for a bullish case, you'd obviously want to see them beat that -$1.02 EPS consensus, a smaller loss than expected. But maybe more importantly, the analysis points towards things like sequential revenue growth, showing that business is expanding quarter over quarter, and positive commentary from management.
On what specifically?
Things like accelerating commercialization efforts, maybe announcing new partnerships, or reporting increased adoption rates for their CGM system. Signs of real forward momentum and market buy-in.
Got it. And on the flip side, the bearish case.
Well, weakness would obviously come from missing on EPS or revenue, but also look for things like deteriorating gross margins, maybe a lack of clear progress updates on commercialization, or, and this is key, if they provide soft forward guidance.
Suggesting a slowdown ahead.
Exactly. It's really about the whole picture, the narrative around the numbers, not just the headline EPS figure.
So out of all those factors, EPS, beat miss, revenue, margins, commentary, guidance, but which one feels like the most important metric for Senseonics right now? The one thing that, given their stage, will tell us the most?
Given that Senseonics is squarely in that commercialization phase, the analysis really highlights forward guidance as probably the most critical factor.
More than the backward-looking numbers.
Potentially, yes. Their outlook for future sales and revenue, and especially those adoption rates for their CGM system, that tells you more about the future path, how well the product is actually gaining traction in the market, than just the results from the past 3 months.
It's all about that future growth story and how fast they can scale up.
Precisely.
Okay. So let's pull it all together. Based on everything we discussed, the history, the lack of recent news, the muted expectations, what's the overall leaning from this pre-earnings analysis for Senseonics? What's the bottom line assessment?
The analysis lands on an overall leaning of neutral.
Neutral. Okay.
And it gives a confidence score for that leaning of 4 out of 10.
Neutral with relatively low confidence. That's interesting. Why that specific take? What's the thinking behind that cautious, neutral view?
Well, the rationale laid out makes a lot of sense when you connect the dots.
Yeah.
You've got the company's history of basically meeting estimates, so few surprises expected there.
Right.
You've got the limited price volatility after past reports. The market hasn't historically overreacted. And then there's the current lack of obvious catalysts, no big news. driving excitement into the report. Add to that the somewhat limited analyst coverage and market expectations. It all points towards that neutral stance.
It paints a picture of steadiness, maybe lacking a strong near-term trigger.
Yeah, steady, perhaps unspectacular progress seems to be the baseline expectation, and the low confidence score reflects that lack of a clear directional catalyst right now.
So for you, our listener, hearing this neutral leaning low confidence assessment, how might someone think about approaching this? The analysis touches on different perspectives, not as advice, obviously, but as examples of strategic thinking.
Exactly. It's not advice, but it explores how different risk tolerances might view this setup.
Okay.
For someone who's generally risk-averse, the analysis suggests maybe just avoiding holding the stock through the earnings announcement itself.
Because of the uncertainty.
Yeah, due to that low visibility, the limited coverage, the history of low volatility. Basically, it's hard to have a strong conviction either way, which isn't great if you dislike uncertainty.
Makes sense. And for someone maybe more comfortable with risk.
For the more risk-tolerant, it mentions that potentially a small speculative position using options, like short-term straddles or strangles, might be considered.
That's playing for a big move in either direction, right?
Exactly. It's a pure volatility play. You buy both a call and a put, hoping the stock moves significantly, up or down, more than the cost of the options.
But with caveats.
Definitely. It says this would only really make sense if the options aren't too expensive, meaning implied volatility isn't already super high. The logic is simply that because expectations are low.
Any surprise could cause a bigger than usual move.
Potentially, yes. A big upside surprise or a major disappointment could break the pattern of low volatility. But again, it's highlighted as a speculative approach, purely trying to leverage that potential for a move around a low expectation event. High risk involved.
Understood. Well, there we have it. A really thorough look at the Senseonics Holdings pre-earnings analysis, pulling out the key pieces of information for you. It really is fascinating how might we can glean from these sources when we know what to look for.
It absolutely is. And this whole process, I think, really underscores how important it is to understand the specific stage a company is in, like Senseonics being in commercialization. That context totally shapes which metrics actually matter most.
Yeah.
For a company like this, that consistent year-over-year reduction in losses we talked about, what does that really tell us about their long-term prospects and their path, even if the overall market sentiment feels kind of neutral right now?
That's definitely a thought worth considering, something to mull over.
Right.
Well, thank you again for bringing these sources and walking us through them. And thanks to all of you for joining us for this exploration.
Always a pleasure.
If you found this useful, please do subscribe, like, and comment. Your support really does help us continue these analyses. And don't forget, if there's a company you're watching, let us know below. We look forward to the next time on Investing Talk Podcast.